You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio.
Welcome back.
Welcome.
We brought it up a decade or two.
No, I just hit the wrong button. Welcome back, Todd Halterman, Alpha 3 Wealth. Good morning.
Good morning.
Let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls. I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we're celebrating today. We got a lot to celebrate today. One of them, though, I don't know. It's a mixed bag. So today's National Lottery Day. And I'm going to just go out there and tell you that, if you like the lottery, understand what you're doing. It is entertainment. That's all the lottery is. It's entertainment. Don't think you're going to win. It's kind of like going to Vegas. Right? When you go to Vegas, do you really expect to win? Well, most people, they say they're going to go there and they're going to win money and they end up losing money. How do you think they build all those big hotels? The one that wins is the people that own the casinos. So kind of like the lottery, but it's entertainment. A lot of folks like to talk about, if I won, what would I do? So that's the discussion right there. National Lottery Day. So we've got that one going on. What else do we have? If I get my screen back on here. National Tattoo Day. If you know me, you know that I do not like tattoos. I'm not a fan of tattoos. My thought about tattoos is very, very simple. If I owned a Ferrari, would I want to spray paint it? No. So similar with the tattoo. World Emoji Day. I've got to tell my wife about this one. She loves emojis. And I've got to call her sometimes and ask her about the emojis, because the problem with emojis is I don't always understand them. So sometimes she has to, I'll call it, hey, can you translate this for me? Let's see, what else do we have going on? We've got, National Peach Ice Cream Day. I don't think I've ever had peach ice cream. I've had a lot of types of ice cream. I don't think I've ever had peach ice cream. Rocky Road, peanut butter and chocolate. Those are my favorites. Peach ice cream. I do like peach pie with whipped cream on it. And today's National Hot Dog Day. Okay, question of the day. What's your favorite brand of hot dog? Todd, do you have a favorite hot dog brand?
I'm an all beef Frank guy, so give me Ballpark all beef.
Ballpark all beef. National Hebrew National is mine. So I guess we're on the same page there. Yes, I know. Laugh at me. The Jewish guy wants the Hebrew National.
Oh yeah, but they're pretty good. Them Nathan's New York dogs are good too.
Yeah, but you have to eat 50 of them or something like that. I wonder if are they putting an asterisk next to their competition this year at Nathan's, being that Joey Chestnut was uninvited. How do you feel good about yourself winning that when Joey's not allowed to be in it? I'm just throw that out there for you. Did I get them all, Josh? Do I have all? Is that all that's all that we're celebrating today? We're certainly not celebrating the NASDAQ today because that's kind of hurting. I looked at that earlier this morning. The NASDAQ down 469 points. Yeah, that's painful. A lot of the chip stocks are really bringing the NASDAQ down. When you think about this, the NASDAQ is down 464 and the Dow is up 230. Now, some of the big chip stocks are part of the Dow. So you look at that and you say up 230. The S&P 500 is down 68 right now. So NVIDIA, well, anybody that owns NVIDIA can't complain because NVIDIA is one that's falling today, but it's been on an astronomical run. I just throw that out there for you, and I haven't looked at seen exactly what NVIDIA has done today, but my guess is it's a good portion of what's bringing things down. Only $7.50 today, down 6%. So I don't think anybody should be no one's crying over an NVIDIA. Just throw that out there for you. Speaking about crying, have you listened to some of the commentators on MSNBC? Only MSNBC could get away with could do this kind of stuff, and people would still watch it. Well, I guess not too many people watch the station, but that's a whole different story. But they're complaining about the size of President Trump's Band-Aid or bandage on his ear. I mean, could you imagine that's what they've got to complain about? Unbelievable how these things go on. Well, we're just going to keep on talking about real estate and investing and how you can make some money in this market, how you can invest wisely. How can you buy a house and have it paid off in, 8-10 years? We've got a case study we're going to talk about today, paid off in 3 years. Could you imagine paying that off in 3 years and not having to make significantly higher payments or maybe even no higher payment? Just amazing what some of these things are going on right now. And a lot of people don't understand this stuff. That's why we talk about it on Ron Siegel Radio, is because that way you can be educated. I would venture to guess 90% of the people have never heard of an offset loan. 90% of the people have no idea. Josh, we should throw this up there. If you can put a quick question in there. And again, those of you that are, we're stuttering today. QOTD. Love that. Okay, good. So in any event, hey, don't forget, put the answer to the question of the day in comments, if you would, please. If you're listening to us on KMET AM 1490 or FM 98.1, yell at the radio. We'll hear you. Okay, just yell at the radio. We will hear. Second question of the day. This is just a useless trivia. How long does it take to pay off half of a 30-year mortgage? How long does it take to pay off half of a 30-year mortgage? How many people really know that answer? And let's see. Good, Josh. Thank you. Okay, so if I can figure out how to stop this thing. Would it surprise you to know it takes 22 to 25 years to pay off half of a 30-year mortgage? 22 to 25 years. Why? Because all you're paying at the very beginning, or the majority of your money, is going to interest. We're going to talk about this and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990. Why fixing up your house can help it sell faster and more. Reach me anytime. Again, off-air 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, This 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? All without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990 every day at this time. OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put in your mortgage calculator to get your principal and interest payment. If you don't have a mortgage calculator, RonIsMyLender.com, RonIsMyLender.com. Let's take a look and see. This is what rates did yesterday. 30-year conforming, up very, very little, 6.759. 30-year jumbos up 7.24. 30-year FHA up 6.594. 30-year USDA, that one was down 6.632. And the best loan on the market for our veterans who want to put no money down, 6.319. That was down a little bit. If you want our market commentary, we put it out as early as the data allows each morning. rsrmarketminute.com, rsrmarketminute.com. We do send that email out. It's just a couple of pages. We try and put it in as simplified terms as possible, just so we make it for a combination. We send it out to the financial advisors who have subscribed, also real estate professionals and consumers. So trying to make it so it's valuable for everybody. 10-year Treasury right now is down, is a flat 0 basis points. It hasn't moved at all, 4.16. The mortgage-backed securities, that bond is down 4 basis points, which means interest rates are up ever so slightly. And we look at the S&P 500 down 75.09. What's driving all of this? Well, we've got a combination of issues. Some of them are good, some of them are better. So we've been watching for a long time the CPI and the PCE inflation reports. And we've been telling you that there's a long lag between shelter costs and what goes into those, which is a major part of both of the reports. If I'm doing it off the top of my head, I think it's about 45.5% of CPI, core CPI, and 21% of core PCE. Well, the Cleveland Fed came out with their numbers yesterday, and they came out and said that the rental price increases decelerated from 5.6% to 4% on a year-over-year basis. Again, this is according to the Cleveland Fed. The rental reading is about 1% higher than CoreLogic, but using these numbers from the Fed, it's still 1.2% lower than the shelter readings in the CPI and the PCE inflation reports. Historically, there's a strong correlation between the Cleveland Fed's rental figure and the shelter component in PCE with a bit of a lag. When this catches up, it might be about 0.25%, 1% to the PCE numbers. And that'll be very helpful. We heard from Fed Governor Waller and New York Fed President Williams, both of which are influential voting members. Waller said that the recent data is consistent with achieving a soft landing, meaning getting inflation to their target without causing a recession. Yeah, right. New York Fed President Williams said that rate cuts are going to be warranted in the coming months, which sounds like July is too soon. September? Well, if we get the QCEW report, which is legitimate, a legitimate jobs report, it's not like the BS we get from the BLS. The QCEW is a mandatory reporting that comes out, but it does have a lag. So the number that's coming out is going to be the fourth quarter of 2023. If that number comes out as light as we expect it might, and as light as it did for the prior report, we could see some significant required rate drops from the Federal Reserve. What does that mean to you? Well, historically, after a period like we've gone through where the Fed increased interest rates dramatically, the first time they start lowering rates, the stock market corrects itself. And I think the definition of a correction is about 20%. So be careful right there. A lot of folks are thinking that there might be some big changes, or they're going to start in September. Now realize there's a July meeting, a September meeting, a November meeting, and a December meeting. They already moved the November meeting back 2 days or 1 day, so that they don't, it's not going over the election time period. Just be careful. Watch what's going on. You're going to need to talk there or listen to what we're telling you on Ron Siegel Radio. Housing, the National Association of Home Builders measures builder confidence, fell to 42, which is the lowest level since December and is in contraction below 50. Current sales fell 1 point. Future expectations rose 1 point. Buyer traffic fell to 27. Oof. Builders are still feeling pessimistic. Future expectations did rise as they're seeing the light at the end of the tunnel, maybe not a train, with rates after the recent data and likelihood of a September cut. So got some good numbers there. Remember, the numbers that come out here, bad is good, good is bad. That's kind of the way it works when you're looking at these things. That's the Mortgage Minute brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So we've been talking about our Home Select product, and I'm going to give a quick case study, and then I want to chat with Todd Halterman about this, because the numbers that we talk about here are staggering, but you've got to have a combination of a liability advisor working with a financial advisor. So first case study, married couple, variable income, home value, 1.76 million. They've got a first of 1.2 million at 6 1/8. They've got a second of 208,000 at 9.825. Minimum payment drops $5,905 a month. A drop of $5,905 per month. The effective APR drops to 2.264 from a weighted 7.933. The loan is paid off in 9.9 years versus 30 years, and the net worth increases by $6,167,000 over time. $6 million. Now, how does that happen? Well, because you're paying off the loan so much quicker, and you're not having to increase your pay. Well, I told you the payment drops. But then you've got to get it with a good advisor. Now, Todd Halterman has been on the program with us many, many times. And Todd and I chat about, there's aggressive investing, there's secure investing, there's no risk investing. And yes, I understand because I was licensed at one time. No risk investing means United States treasuries of some sort. And Todd's licensed, so we're not giving financial advice here, just chatting. Todd, is it possible, do you have products that over the last 30 years may have averaged around 8%?
Yes, but I mean, that takes significant risk over the last 30 years.
Okay, so that does take risk. Okay, so what would you say for a moderate risk? Because I thought you could do some of the index universal life policies that might be minimal risk.
Well, I mean, we can talk different products or programs, but overall, generally speaking, over the last 30 years, because interest rates and inflation have been held so artificially low, to truly get a net 8% return, a person's willing and able to take risk to get that. Now, if you look over the last 30 years, index universal life has averaged between 6 and 7% net returns, but with a lot of safety. So, but at 8%, that's kind of been the delta the last 30 years. So not to get technical on you, Ron, but today 8% is a pretty simple return to really calculate based on the environment we're in, with the inflation cycle and interest rates being up where investors are actually getting paid.
Do you have to have a lot of money to do that, or is that something that somebody could? If they're sending over $6,000 a month to you, is that something that you think might be achievable?
Oh yeah, we oftentimes with this type of strategy are able to build wealth very quickly for families, and we have basically programs for this that allow them to grow it in index funds at no fee. So basically like the index program you were talking about earlier, but they have partial downside protection, but they're getting in the indexes at no cost. So it's a unique time for them to be able to consolidate with you, pay down their debts and off early. But also we are capable of helping people with no fees, no management fees, no internal expense, invest in index funds and still have protection on the downside.
When you invest in index funds, is that all taxable when you on a regular basis, or is it just when you sell?
Just when you sell, because the way we structure these index funds and the trusts is the taxes are deferred until you pull money out. That way your account can compound. You'll get interest on your principal, interest on your interest, and growth on the money you would have paid in taxes.
That's a big portion of it right there.
Correct.
Okay, so now if you want to take, do you have to do all of your money into one thing, or can you spread it out into?
Oh, yeah, we always want to diversify, and people need buckets of cash. We believe in a lot of cash for folks, so designing it really is about their lifestyle and making sure that their cash bucket and their investments are diversified in areas that are going to give them the growth they expect with as low as risk as possible, and of course lowest cost fees as possible.
So let me ask you this part, Todd, because on this particular program that we're looking at, so on this one family, as they pay this down, they're going to have $1.4 million in liquidity. Is that enough in their bucket of cash?
Yeah, and we talk about asset location planning. So very often families don't have a lot of money in after-tax buckets. So to be able to optimize their mortgage, pay it off early, and accumulate $1 million in cash after tax is really the American dream, Ron, because most people retire. They may have a lot of money in their IRA, but nothing outside of that except the equity in their home. So the program you're purporting to do for people is really cutting edge. And if people are listening right now, I don't care what your mortgage rate is. I would have your office run illustrations for them because this is true wealth builder.
Yeah, we're going to talk about when we come back about a scenario with that the program beats out a 2.4% mortgage. So we're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Reach me anytime, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694552.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com. Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
We're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment brought to you by rsrmoney.com. Why fixing up your house can help sell it faster. If you're thinking about selling your house, you should know there are buyers who are ready and able to pay today's high prices. But they want a home that's move-in ready. A recent press release from Redfin explains, quote, buyers are still out there and they're willing to pay today's high prices, but only if the house is in really good shape. They don't want to spend extra money on paint or new appliances, unquote. It makes sense when you think about it. They're having to pay a lot of money for a house in today's market. That means they may not be able to easily afford upgrades after they move in. So if your home is outdated or needs some work, Buyers might pass it by, or offer lower price than you were hoping for. And there are a lot of homes that need upgrades right now. Millions are entering their prime remodel years, meaning they're between 20 and 39 years old. Maybe yours is one of them, according to John Burns Research and Consulting. The number of homes in their prime remodel years is high and growing. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing the charts. If your house falls into this category, important to consider making selective updates to help it appeal to buyers so it sells faster. But how do you know where to spend your time and money? Well, by working with a local real estate agent to be strategic about the improvements you make, you can be sure you're making a smart investment. Put simply, not all upgrades are worth the cost. As Bankrate says, quote, before you spend money on costly upgrades, be sure the changes you make will have a high return on investment. It doesn't make sense to install new granite countertops, for example, if you only stand to break even on them or even lose money, unquote. And as the same Bankrate article goes on to say, that's where a local real estate agent comes in. Quote, a good real estate agent will know what local buyers expect and can help you decide what trends, what needs to go doing and what it doesn't. Your agent will know what buyers in your area are looking for and what they're willing to pay for. By working together, you can avoid spending money on upgrades that won't pay off. Instead, they'll fill you in on which changes will make your house more appealing and valuable. Bottom line, selling a house right now requires more than just putting up a for sale sign. Give me a call at 800-306-1990, 800-306-1990. We can chat about what makes sense for you, and I'll put you in touch with a great real estate agent. That's the Real-Time Real Estate segment brought to you by rsrmoney.com. Case study number 2 for Todd and I to chat about. Okay, so this person is concerned about losing their job. That's not a surprise right now. Got a house worth about $900,000, a loan balance of $562,000. The minimum payment drops $675 per month. The effective APR drops from 2.529 from 2.625. So it only dropped about 10 basis points. But the loan's paid off in 11 years versus 25.8 years. Net worth increases by $653,000. And did you notice the amounts there? So the home value is $900,000. The loan balance is $562,000. But on something like this, we could set up the line or the loan. Don't have to take it, but you set it up at $720,000. You've got $160,000 in availability. Now, what do you think if you could just write a check for living expenses at $160,000, and you're not dealing with taxes and you're not dealing with a mortgage payment? It's a pretty good lifestyle to try and find a job. Do you think that might reduce a little bit of stress? Just a thought there. Todd, what do you think about this concept for those people that might be worried about the job market? I mean, are you hearing about people a weak job market in your area?
Yeah, I'm hearing some shift in trends on the job market. But, you know, the funny thing is media and reports have been so sensationalized. The extremes seem to be coming up more and more, and then the actual reality is the numbers don't end up there. So we're trying not to get caught up too much in forecasting some of these salient points right now. But to address that, Ron, whether you're worried about jobs, whether you're worried about income, the bottom line is, what in the world does somebody have to lose? I'm hearing these numbers and I'm listening and I'm thinking about how many 50-year-olds out there in this country would love to be 60 with no mortgage and a significant amount of capital in their account that's not in an IRA.
That's a big issue right there. And, you know, again, the concept here is when I talk about the net worth increase, that's by taking those proceeds. You pay the loan off in 11 years. And here you're talking about, okay, you can take that $675 a month and either put more money into the loan to get it paid off quicker, although you're keeping the loan open so you have the liquidity, or you're sending that over to Todd to get it invested strategically, right? And you can start making some nice strategies out of something like that, can't you, Todd?
Oh, what's wonderful about the world right now, Ron, is it's actually a nice place to read the menu. If you closed your eyes right now and fell asleep for 10 years and woke up, how much bigger do you think the aerospace and defense technology business is than it is today? How about infrastructure where they're building highways, bridges, and roads? How about cybersecurity companies? Or how about artificial intelligence or robotics companies the next 10 years? How much bigger are those industries in 10 years? Not looking month at a time to the volatility, but really where these industries are going for growth. And wouldn't it be beautiful to be able to put some money in those industries and let them cook for 10 years while they're paying off their mortgage? Because it looks to me like those industries could grow 3 times their current size over the next 10 years.
Well, I don't know investment items, and I don't check these things. That's your world. But I was listening on one of the business channel the other day, and they were talking about one of the big brokerages has an infrastructure investment that has an 18% return. It's got a 7-year hold. So if my math is right, that means your investment's going to quadruple in that 7 years at 18%. And again, it's infrastructure, so that probably sounds like it's probably something that would be a safe, secure thing for someone to talk to you about, wouldn't it?
Yeah, there's a lot of opportunity in America right now, Ron. There's big spreads available to investors who don't want to take big growth risk so they can get high interest. We're seeing fixed interest coming in between 7 and 11% right now for investors who are what I'll call lower risk and more like bankers. The equity opportunities are pretty outstanding right now in certain sectors: finance, energy, oil. Several markets right now are fundamentally very sound. I haven't had this much fun helping people put money to work in 2 decades, and interest rates are paying investors. So for you to come out with a program that's going to help people get out of debt, realign their finances, and accumulate cash, way to go, man. That's some creative abilities in your guys' underwriting and building your product to help consumers build their wealth. I'm very impressed.
We like to try and come out with things that are a little bit different. And that's not too many people ever talk to a liability advisor, right? It's a whole different ball game, because everyone needs to have a financial advisor.
I thought your wife was a liability advisor.
Yeah, well, one of us has to create him, and one of us tries to minimize him. And you know my wife very well, so you know which is which. Thankfully, she doesn't listen to us, so she won't be hitting your cell phone anytime soon, Todd. But something. It's interesting. Now, I want to and I don't want to get political, but does who wins the election, will that have an effect on what you're talking about from the environment that you're looking toward?
Well, the interesting thing is that right now the election politics aren't really focused on market politics. So other than interest rates and taxation legislation, corporate America looks pretty solid, sincerely, from a profitability standpoint. It's really the issue of global and macroeconomics. Is China going to cause some issues with trade, or are we going to go to war? Is Ukraine and Russia going to continue and put a burden on the global gas supply? So there's a lot of macroeconomic noise, but let's be real. If President Biden stays in office, our current markets and the economy is used to that leadership. Whether it's good or bad for you, they're used to that leadership. So we don't see any incremental changes, except the tax acts expire the end of 2025. So the tax laws will go back to what they were before President Trump was in office. That's an issue that will affect the capital markets in the future. If President Trump gets voted in, we believe the capital markets will like that, what I'll call capitalism mentality. We believe the markets will surge on that news, but there's also some systemic macro risk that we're worried about. Pushback across America in major metropolitan areas. We know the National Guard's been training for riots and insurrection, mobilization. So, there's risks all over the map, but the markets look pretty stable right now, especially where the Fed has painted a picture, raised interest rates so high, so quick that banks are merging all over the country. Their FDIC reserve requirement is only at 2% right now. So they're going to have to lower their monetary policy and help these banks get healthy.
Interesting. Well, one thing that we know with 100% certainty about the election, regardless of what the media wants to say or anything, we all know what President Biden will do because he's been doing it, right? We know his record, and we know if President Trump is reelected, we know exactly what he's going to do because we saw him do it. It's not, historically, when we had the last Trump-Biden battle, we didn't know what President Biden would do because it was an unknown. And every other election we've had has always been an unknown with one of the candidates. This is the first time in my lifetime, probably most everyone else's lifetime as well, that we can look at history and say, okay, here's what Trump's agenda is, here's what Biden's agenda is. What do you like? And the market, I think, looks forward and says, okay, we're going to hedge both. Right? I mean, they really don't care. They just want to make money, so they're going to hedge both ways, aren't they?
Sure seems like it, but again, I think that bodes well for Americans to have some predictability. We haven't had predictability in a long time. Since 9/11, our fiscal markets have been manipulated significantly through quantitative easing and artificial inflation. So today, I think we're able to see a little bit more real, the fundamentals. And it's making it a little more predictable. So your Home Select program, putting extra capital in Americans' hands right now is pretty significant, my friend. And to be able to get rid of that debt, because let me tell you something, 10 years out, taxation and debt loads are going to kill American families. So if you're listening today, get with Ron Siegel Radio, see what a Home Select program would look like compared to what you're doing today. It will help create wealth for you.
Beautiful. We're going to continue talking about it. We've got one more case study, and we're going to talk more with Todd about investing, Home Select, opportunity. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Hey there, friends. Wondering if now is the right time to buy a home? Or are you waiting for a bunch of foreclosures? The facts speak loud and clear. Defaults and foreclosures are down. Sure, we might be headed towards a recession. But did you know interest rates typically drop and real estate values often go up during a recession? So what are you waiting for? Higher prices or higher payments? Don't navigate these waters alone. Connect with RonSiegelRadio.com today. That's RonSiegelRadio.com.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 306-1990, 800-306-1990. Borrow Smart segment today being brought to you by rsrhomeselect.com, rsrhomeselect.com. Case study number 3, married couple, thriving business, wants safety and security. Home value, $1.1 million. Loan balance, $397,000. Remember, we can take that loan all the way up to 80%. 90% if you're buying a new house, so it can be used for 90% too. But in this case, the minimum payment drops $839 a month. Effective APR, get this one, 0.76%, down from 2.4. Loan is paid off in 3.7 years versus the current 22.5 years. Net worth increase, $1,017 over time. Now, remember, all these case studies, there's no guarantees. You got to follow the program. And we can lead you to water, but we can't make you drink. So all of these are available. That is the Borrow Smart segment brought to you by rsrhomeselect.com, rsrhomeselect.com. Continue our conversation. We are chatting this morning with our friend Todd Halterman, Alpha 3 Wealth. If you want a great financial person, advisor, highly recommend reaching out to Todd and his team. I have my family going there, so if you can't talk about any higher recommendation, then in fact my grandson's got some stuff going Todd's way, and he's only 3, so love having you on the team, Todd. So it's you and your group there on the team.
We appreciate it, Ron. We're of the Mutual Admiration Society, buddy.
Absolutely. So what's some of the new things that are going on? I mean, you've talked to us in the past and you've shared some things where you've had some off the beaten path. I know you told us at one time that you had some funds that were investing in non-public companies. And what's new and exciting right now?
Well, what's exciting, it's funny you say that because everybody talks about the publicly traded stock market. Everybody just kind of goes by the private equity market because they don't think they can have access to it. But there are a tremendous amount of profitable private companies in this country that are going to want to go public. So pre-IPO private equity companies like SpaceX, companies like Pinterest and Zoom and Uber and Lyft were all private companies before they went public. And so that private equity space is heating up a lot. So people that want to own SpaceX before they go public and help launch that company, no pun intended. It's an exciting time for these valuations because private equity companies don't update their values annually with an appraisal. They only get appraisals when they're going to go another round of financing or they're going to list their companies public. Well, a lot of the companies in the private equity space right now are getting ready to do appraisals for the first time in 3 or 4 years. Well, many of these companies have 50% gross profit margins, Ron, and their minimum profits are $50 million or higher. So if you have a gross profit of 50% and your profits are 50 million or higher, and you haven't done an appraisal in at least 3 years, what's the likely outcome of those appraisals when they happen?
Well, it seems to me that again, regardless of the politics, just from the leadership, you mentioned that the Trump tax breaks or tax modifications expire in 2025. I think some of these companies, if President Biden is reelected, they're going to want to take action before those expire, aren't they?
They do. That's why you see the private equity market heating up right now. They're all lining up to file their S1s. And S1 says we're declaring to set a valuation for our company to go public. And that means they start getting appraisals. Well, investors that own those companies before the appraisals will get the benefit of those appraisal valuations because the company will then be updated with new values. So we're fully expecting that private equity market to surge in double digits over the next 24 months, just from the activity of the new appraisals and the new valuations. Ron, we're seeing some amazing programs out there right now. Like we have some banks or financial institutions paying 12% tax-free income.
Wow.
We have some investors that are investing in private equity franchises of fast food restaurants and getting a 7% income from those fast food restaurants, and the profits are 15% before taxes. So It's an exciting time. And by the way, those investments give tax credits to investors when they invest in private businesses. There are tax laws that say for certain private businesses, you get tax credits. So last year, clients that invested in private equity fast food franchises, they got 40% of what they invested back in what they call passive losses to take income off their tax return, even though the investment was profitable by 15%. That's government rules. So we help save people on taxes. We help them buy private investments that pay really high yields and that have double-digit net returns. They don't have to take the risk of the stock market. We can buy private companies and help people flourish.
That's a whole different concept because nobody really, it's not sexy, Todd, that you talk about some of these things and, you never hear about those things when you're listening to CNBC or Fox Business or Bloomberg. They're not talking about those things. I guess that's one of the big reasons, in my opinion, that you really have to go to a professional advisor who is studying this like you guys do.
Well, if you look at Harvard and Yale, some of the most successful endowment investors in the world, I mean, their average returns are in the 12 to 16% range. Ron, if you look at their allocation plan, 20 to 30% of what they invest in are private equity businesses and private businesses in general. It's not just stocks and bonds and mutual funds. These people understand the power of private businesses that have real tax returns and real values. So the smartest people in the world are doing it. Why is the layperson not gaining access to it? And the truth is, to get access to private equity, it usually takes more than $1 million. And you need 5 to 10 years to wait before you get your money back. And most Americans can't do that. So basically what we've done is we've created an environment where we can gain access to those private equity companies. People don't have to have $1 million. And they can be somewhat liquid to get out when they want to get out. They don't have to be held up to an agreement that says you won't pull it in 5 years. So anyway,
now those big funds, those big firms, that you talk about, Harvard and Yale, their endowments, they can sustain losses. Are these things high risk?
Well, here's the fun part. They're private companies. Okay. So the risk with private equity usually is it's not liquid. We now have programs where we can get people semi-liquid. So I'm not going to call it low risk because I don't run the company. I don't control the risk of the company and I don't control the IPO market, but it's not high risk. It's a lot lower risk than the publicly traded market, but we have to say legally on the computer and online, this is a moderate risk investment that you must understand values will go up and down.
Well, and we want to have that, and again, like I mentioned before, I should say it again. Todd's not giving anybody financial advice here. That's what he does for a living. If you want to pay them for their services, which I highly recommend you do. Todd, I don't know if it's still the same scenario, but a lot of people look, and I've got other people that I know that they like to go to Schwab and they like to go to these online services and things like that. The big serious and big investors, are they still going to the hedge funds and paying the 20% of their profit and 3% management fee? Is that still the number that they do?
A lot of savvy Wall Street people are still using hedge funds and utilizing their services. Yes, Ron, that's happening all across the board. But here's the fun thing. There's been a huge design change in America over the last 5 years. We actually now can utilize programs for the retail investors, not institutional, that allow them to have hedge capabilities, but at no fee, or the maximum fee is 1.25%. So if the stock market goes down 15%, we have investors that actually make 15% and they're paying no fee. Or at worst, if they're paying the trading fees, they're paying 1.25% in the trading fees and there's no management fee. But literally, we're getting dual direction for a lot of our clients who are nervous about the market being so high right now and the contentious election. So if you're an investor who is a little bit risk averse or you want some downside protection, this is a great time in America to get your own hedge fund set up, but not go to an institution who's going to charge you 20% or a 3% annual management fee.
There's a lot of opportunity there, a lot of things that we never hear about that doesn't get to the main street. You hear about from the liability side that we've been talking about all day. Todd's sharing information from the asset side. You just need trusted guidance. Why do you think I've been saying since 2010, you need trusted advice. And I say it a few times every show. Todd, appreciate your time. Appreciate you coming in and sharing. If you want to reach Todd, give me a call at 800-306-1990, 800-306-1990. Happy to put you in touch with him. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.